So, where do you see the interest rates playing in investment, and how are you going to de-risk or protect yourself against interest rate increases, especially someone's going to be geared at 80% debt, you 20% equity, 80% debt. How do you
Yeah,
see as protecting yourself from that?
I love it. There are some factors that are coming into play that are even bigger and more interesting than like the interest rates themselves. And so I'll answer the interest rate question, but we also have to look at the big generations, right? The size of the baby boom generation, the size of the millennial generation, and the age that people move out of their properties. So when somebody starts dying, their property gets left. It's given to the family. Typically, they don't keep it. They sell it at a discount because they don't want to hold it anymore. It's got memories. It's usually beat up, hasn't been fixed in the last 10, 15 years. So we're looking at this trend of baby boomers who are just at that 75, 76-year-old mark. And the average age of somebody who lives in America is 70, 77, 78. So they're about 2 years out from this massive, we're talking a mass population of people just letting go of their properties. That's going to have a much larger impact than the credit the interest rates. But when you look at interest rates, we as investors like interest rates going up. So we're locking in our rates now. We're locking in everything that we have at the moment at these 2%. And on commercial, we pay a little bit more. We're paying 4%, 5%, but it's
Mm,
okay because it cash flows. What we are looking at is when interest rates go up, prices come down.
that's right.
So,
Yep.
so we don't mind paying higher interest rates because we make our money on the purchase. We make our money on how much we paid for the property because we can always pay off the property. We could sell the property.
Mm,
And that appreciation gap makes a lot more sense for us. So
mm,
having high interest rates, in fact, I've bought properties at 15% interest. Over the last 10 years of buying, I bought properties at 12% because I couldn't get traditional financing. I had to go through hard money. I
yeah.
had to go through these different means of borrowing money. So you just have to make sure that your property cash flows. And this is what I tell everybody. If you can buy at 12%, man, just wait till you refinance. It's
Mm-hmm,
gonna be golden. It's gonna be amazing because all that cash flow is now yours.
mm-hmm.
And so in this market, in this height of a market, you have to buy for cash flow. You can't look at real estate as appreciation. You can't play the crypto game and the stock market game.
No.
You invest for cash flow. And if it cash flows and the market drops, you still got cash flow tomorrow.
Mm,
You're still winning.
yeah.